audience, just so you know, if you're a swing trader or day trader, Alexis doesn't like you. What is technical analysis? Technical analysis, broadly defined, is looking at chart patterns and price action. And there are a lot of different ways to do this. There's the candlestick method. There's the, I think, point and figure method. There's all kinds of ways you can look at things. You can look at different calculations, such as moving averages or MACDs, which is, I think, moving average, crossover daily. You can look at on-balance volume. Whole lot of indicators, whole lot of different techniques, whole lot of schools of thought. There are some specific ones that have names like Elliot wave theory. I'm not very familiar with it. There's concepts like applying natural mathematic phenomena such as the Fibonacci numeric sequence to try to predict price retracements or price projections. Retracement being it goes up and then comes back, and then a projection being it goes up and then you project to a higher point. There's a whole wide variety of techniques. And not that I'm trying to put in a plug for them, but most of them are available for free on investing.com. I think it's very cool. There's also a chart service called charts.com, and they have a lot of stuff for free too, except their charts aren't interactive. They're kind of more static, but I think they're kind of cool. Those are two sites that I kind of like, not to really get off the rails, and I'm not getting paid by them to say so. Just recommendations if you like to look at charts. Those are both pretty good. So that's technical analysis in a nutshell. It's trying to look at prior price action, historical price action, to try to determine where things are going to go into the future, right?
If you believe that it can, not even believe, but if you believe that that can be a good indicator for future price action.
Well, there are a lot of things. If you'd asked me when I was 6 years old, what do I believe in? I didn't believe in the Tooth Fairy, I didn't believe in the Easter Bunny, and I didn't believe in technical analysis.
At 6 years old, you didn't believe in any of them?
Probably not.
Well, technical analysis, I'm not sure a 6-year-old would know what that is, but I feel like you should believe in those other ones. No, I don't know. I'm not sure I'm convinced. I mean, I see that when people, especially like I think swing traders or day traders look at technical charts and they're able to predict price action, I'm not disagreeing that there is definitely something to it. I just personally don't like it, and I don't think that it is very objective. I think it can sometimes be subjective. So like if you're emotional about a certain investment and you want to see a certain pattern, I don't know, I don't have a whole lot of experience with this, but I feel like there are so many different strategies and different, I don't know what the right word is, like patterns you can look for and predictors, that it makes me a little suspicious or skeptical that any individual who is kind of especially emotionally invested, no pun intended, but they can probably take one of at least dozens of patterns that they might be able to fit the narrative that they want or the prediction that they want to see in an asset. So I just feel that it's a little bit subjective, a little bit open to interpretation. My experience or my opinion, my very limited perspective is just that it feels not fundamental, not objective, not scientific, I guess, for lack of a better word.
Not scientific, yeah. No, I think what you're describing there is confirmation bias. Confirmation bias is something whenever you're studying anything that was scientific or analytical or not, or business or price movements, whatever. Confirmation bias is where you have a bias, you have something you want to happen, and then you basically cherry pick the data to fit whatever you're trying to support, and you tend to ignore or neglect the data that might go against your position. So in technical analysis, there could be 4 or 5 factors that support a bullish position for whatever you're investing in. Maybe you're long that, so you want to see a bullish outcome. And then there might be 4 or 5 factors that are bearish. And if you have confirmation bias, you might ignore the latter 5 in favor of the former 5.
Yes.
Sure.
I mean, I've seen that before where it's like you can look at a certain pattern and it maybe looks like one thing, but then if you just tweak it like just a little bit, then it looks like something else, and then the prediction is totally different. So I'm sorry. Go ahead.
I think those are reasonable critiques, and I share them still, and I shared them a lot more. My initial impression of technical analysis was I heard about it. I said, this is total bullshit. Like, there's no way this can be a thing. You look at this, you look at that, and you're supposed to be able to divine this and make profits. It sounded a lot like a less scientific version of meteorology. You know.
Yeah.
But that being said, I've had some insights over the years because, you know, I try to keep an open mind to different approaches and techniques. And whereas I probably have a skew myself personally toward things like commodities, toward things like real assets, toward things like value, which honestly has hurt me over my investing career, unfortunately, that bias. But while I have that as my bias, that's my skew, that's where I feel more comfortable. I also want to consider, okay, well, what are things that I'm missing here? What value could there be in this technical analysis? And to the extent there's any value, how can I use that to help myself and to help my own investing over a period of time? So one thing that I've noticed is when I've gone to be skeptical of technical analysis, this is the first insight, is basically that there's an importance of understanding that technical analysis guides probabilities and possibilities, but not guarantees. And that it doesn't really look to exact price pivot points. It looks more towards zones. So it's easy to discredit technical analysis and say, oh, well, the technical analysis said the price of stock A was going to go from $80 to $100, and it only got to $98.97. Okay, well, that's close enough, right? In terms of any prognostic indicator, if you're getting 90% of the move that you predict is going to happen, I'd say that's a pretty good indicator. Just to give one kind of vague example, and then also, so there might be a probability of, let's say, 60% that it goes from 80 to 100, right? To use that same stock example. But there could also be a 40% probability that it goes from 80 to somewhere less than 80, like let's say 80 to 60, right? And so to effectively use technical analysis, it's insufficient to run it through one or two or three experiments and say, okay, this is bunk because I landed, the trade landed against me or the investment landed against me the first time, the second time, the third time. To rigorously look at technical analysis or to study something that's odds or probability based, you have to do dozens, hundreds of iterations of it and then determine, okay, is this actually effective?
And have they done that? They can determine that there are probability, like well-established examples that the probability is in your favor.
I don't know who they are exactly, but there is something I do know as a fact.
They.
There are people in this world who can successfully trade, usually using leverage, and invest, and they can make superior outcomes than would be expected by random noise.
Yeah.
So, to that extent, the utility of technical analysis is demonstrably proven.
That's like the one thing that makes me think that it's not totally subjective, because you have people who are able to do this repeatedly, it's very successfully,
right,
wildly
right.
successfully sometimes.
Right. So I mean that to me is a little bit of proof, but really just understanding that it's got that limitation of pointing at odds, and then again that it looks to price zones rather than exact price targets on a point by point basis. That's the first insight. The next insight is that price signals can be self-fulfilling prophecies, right? So, for example, you can have a technical pattern starting to set up, and just because that's widely recognized to be a technical pattern, it'll follow through.
And that is actually one of my biggest pet peeves about technical analysis and charting, is that it doesn't even matter what's going on fundamentally sometimes with a certain asset. If it has a strong enough technical pattern, because I know some are pretty well established and very clear.
Right.
Those ones annoy me, because then you almost can guarantee a certain thing may happen, but it has nothing to do with the actual underlying asset. And in fact, sometimes I feel like it poses a barrier, or it poses it pollutes the fundamental investor's thesis or behavior. Or maybe that's the wrong way to say that. No,
I like the way you're putting that.
They're trading,
they're buying and selling for the wrong reasons.
Yeah, and then it's if you're just a fundamental investor and you're like, I think this is a good investment, it can pollute that because, but it's forming a bear flag or whatever, and then everyone sells it because that's what's supposed to happen because of a chart.
I'm going to pull out my inner Jordan Peterson and say this. Well, who the hell are you to say what the morality of the markets ought to be?
That wasn't bad.
That's the best I could do. That's one point. I mean, okay, you don't like that market participants, you're over there, putting your nose up these market participants are just trading on technical factors. Okay, fine. There are also plenty of people who are out there trading for all kinds of ridiculous reasons. True. And if you make stupidity in trading or buying and selling things or market participation illegal, First of all, you're going to exclude most people from the marketplace. No, maybe not most, but
That's
a good
right.
number of them. And then second of all, that's what markets are made of. It's made of aggregate market participants for different reasons, for different motivations, good and bad, morally neutral, et cetera, et cetera. They're trying to participate in the market for whatever reason. So,
But I don't have
I'm
to
okay.
like it.
That's true, and
I can accept it, but I can just also not like it.
Adam Taggart in Wealthy On, he keeps repeating this theme, which I like a lot. By the way, if you haven't seen the channel Wealthy On, it's a great channel. You should check it out. They do really good work there. But anyway, Adam Taggart keeps saying you invest, or in this case, trade the market you have, not the market you want.
Yeah.
Right. So the fact of the matter is, technical signals do exist, and people and large companies and institutions write algorithms to follow and chase the price signals that those technical patterns suggest. So if you start to get random noise, for a classic example might be if you start to get random noise that starts to create a channel for like a bear flag or a bull flag, also known as a bear pennant or a bull pennant. There are people who buy just because they're seeing that signal.
Yeah.
And if that's a fact, and you happen to see that signal too, well, that gives you kind of an advantage, right?
Yeah.
And so if you knew that, let's say you saw a bull flag pattern in let's say the gold market, or let's say the silver market, maybe as a stacker, you should try to buy ahead of that, right?
Yeah, I think then when they intersect, where fundamentally you believe a stock is worth investing in anyways, and you see maybe some technical indicators that it's going to have a little bit of like a, an immediate rise or something,
Right.
based on a technical pattern, then maybe that makes sense.
Sure.
But if you don't even believe in the asset, underlying value you think is garbage, and you think ultimately the asset is going to decrease in price, but there's a bull flag, so you're like, let me just invest. I guess my point is, I don't like swing traders or day traders because that's what I'm getting at. It's
Okay.
like it's counterproductive to actual markets being true. Aren't they supposed to be like the first and the best measure of like the economy?
Yeah.
And that. Sorry, I'm talking.
No,
too
that's
much.
it. But at the end of the day, to our audience, just so you know, if you're a swing trader or day trader,
Oh,
Alexis doesn't like you.
I forgot that
I think-
people might be.
I think you're fine. I don't have a problem with you. I think, keep doing what you're doing. Godspeed. Best of luck
I
to
take
you.
back everything I just said. I forgot that people might actually watch this. I kind of forgot we're on film. Okay, just forget I said that. I think everyone's great, but if you swing or day trade, maybe just keep in mind that you should only do it in the fundamental way.
Okay, right.
I'm just
Well,
kidding,
anyway,
I'm just
and the other way it can help with investors or stackers too is if you see a bearish pattern and you want to go long a position, maybe that can help you decide, okay, well, maybe I should wait a little bit, right? If you see, let's just say for the sake of argument, silver's at $25 and you see a bear flag emerging or some other bearish setup, or it goes below a certain moving average or whatever technical indicators you follow, or there's a divergence on the RSI, whatever it might be. So you decide, well, I'm going to wait until this chart pattern resolves to the downside, and I'll wait for that price to kind of consolidate, and then I'll purchase.
And then you get a better price,
You get a better
entry
deal.
point. Yeah.
And so I think what Alexis is trying to say when she's not busy, in between insulting all the traders in the audience, is that if you are a fundamental investor, then you can use technical analysis to sort of accelerate your positions a little bit and get better price entries. And perhaps when you look to unload, take profits to probably get better price exits too.
Yeah, that's fair.
Which I think is nice.
Yeah, that's fair.
Moving on, the third insight that I've had, unless there's another group of people that you'd like to insult.
No, I think I'm done talking
Okay.
for the day.
All right.
Or at least done sharing my negative opinions. Okay, go ahead.
So my third insight is that sometimes markets move because of clear and obvious reasons. For example, there's a company A, let's call it, that releases news that they're going to go bankrupt and their share prices collapse. Well, that's pretty easy, cause and effect, right? Doesn't take a genius to figure that out. But sometimes prices and price movements, they're occurring for other reasons. And the price movements themselves can be embedded signals of what market participants are doing kind of behind the scenes. Because plenty of market participants are buying and selling, and they're not saying why. It's not like we can go out and conduct surveys in real time and say, okay, all market participants, tell us why you're buying this stock, or why you're selling this stock, or why you're buying this commodity or selling this commodity. Market participants aren't going to come out and tell you. They're not going to wave their arms up and jump up and down in the air and have placards saying, this is why we're buying, this is why we're selling. So the price action itself can give an indication as to what motivations might be, or at least give an indication that there might be a group of people within the market who are trying to do something, and you might not know who that is. A really good example occurred kind of recently. If you look at the price action of gold from around November 2022 to March 2023, the price action it was very bullish, and it rose. The gold price rose from about 1620 to about 1860 recently, and which is a pretty big rise for gold. And then it came out after the fact. I think we started getting news in December, January, February, that there was a substantial amount, this is a work put out by, I think, the World Gold Council, a substantial amount of central banks have been buying massive tons of gold. Now, maybe not enough gold to make, it was only, I think, 400 tons or so, or actually they adjusted it, I think, to 480 tons in Q2 2022. That by itself is not a massive move, but consider this too. Prices for any market are determined by the marginal buyer. So if you have marginal buyers basically placing market orders into gold and taking it off of, let's say, the Shanghai index, that's going to affect, of course, through arbitrage, the New York and London indices. So, right, you have the price action showing you that something's going on, and then after the fact, after the price action already happened, we got news that central banks were buying gold. I think they were putting a floor into the price there. Now, I don't know that they were intending to. In fact, I doubt they were intending to. I think they wanted to buy gold for their own reasons, and that, of course, just happened to increase the price of gold. But that's a really good example of how price action can show what might be going on in an underlying market from major market participants, or even major sentiments within kind of smaller market participants. Kind of like seeing the direction a whale is swimming or the direction a school of fish is swimming, right? Price action can show that, which I think is interesting.
I think probably, especially when you're looking at not like a daily or a weekly basis, but maybe like a monthly or yearly time frame, that's when you can maybe understand better the price movement. Would you agree with that?
Sometimes, yeah. They do say that longer term chart patterns are more robust, yeah.
That they might
weekly
have,
and the monthly.
Or just that there's there might be an actual reason for it rather than just technical, swing trades or day trades. Yeah.
The last insight that I have, this is probably the biggest one of all, and I'm not bringing my scientist doctor hat here, which is basically that sometimes things happen predictably, but for unclear reasons, right? So I'm going to point out the difference between, just to kind of make a metaphor here, between the concept of pathology and the concept of pathophysiology. Pathology is a study of disease, okay, and very interesting, fine. Pathophysiology is a study of disease and understanding the underlying, the physiological processes to it. So for example, we've delineated through pathophysiology a number of disease states like chronic obstructive pulmonary disease, like rheumatic fever would be another example, where the signs and symptoms were known perhaps even for a long time, perhaps for hundreds of years, but we didn't really know what was causing it, why it was happening. So, through lots of research and clinical observation and more research and a very, elaborate scientific process and a lot of empirical investigation, we figured out the pathophysiology. Oh, it actually turned out that there's this microorganism that's causing, disease A, or that, in fact, when there's a certain hormone that's produced in too great or too low amounts, then it produces disease B, right? That's pathophysiology, and people like that because you have what's going on and you have a reason for it.
Yeah.
But we also have pathology, which is a recognition of things that are going on, certain disease states that are happening, certain cellular, derangements that are happening, but we don't know why, right? Because the research hasn't been done. The scientific investigation hasn't been done. The scientific evidence for it has not been forthcoming, right? Because we can't sit down and research every little thing all the time. It's certainly not, instantaneously. So there are a lot of diseases that are out there that are recognized, disease states that are recognized, that are well-defined, empirically demonstrated, reproducible, et cetera, but we don't know why they're happening.
Yeah.
Let's go back to charts. So you can have, just like we described just now, we can have a central bank buying gold, let's say, and that causes the price of the gold on the chart to rise and a lot of technical indicators to flip positive, even before the news is announced. But sometimes too, you can have, you can just have patterns that occur that are trying to tell you something. For example, I'll hear experienced traders characterize, let's say, bull flag patterns like this. And if you don't know what a bull flag pattern is, we'll post a couple pictures and maybe look at it separately too. But it's where a price starts to go up, and then it toggles in a certain area for a while. Could be depending on your time frame. Could be days, months, years. Could be just hours, minutes, even if you're day trading. But it goes up and it toggles between two basically price ranges, creating two slightly diagonal to horizontal bars, right? Or sometimes you can have like a triangular pattern if it's a pennant, or it can be kind of a flag. Okay, so what is that telling you? It's telling you that markets bought up something, but then a number of market participants got to a certain level and they wanted to sell. It went down a bit, and that lower level market buyers in aggregate, those who were willing to switch from limit to market orders, wanted to buy at that specific price. So it's telling you these price levels have some kind of meaning, right? And that's before even the pattern is defined. That's during the definition of the pattern, right? So you don't obviously get a line until you have at least 2 points. You get stronger lines when you have 3, 4, or 5 points. So even just the first couple of points of a bull flag, for example, the market participants in aggregate are saying something about those price levels. They're saying something about the price. And who knows what that is exactly? We don't know what those market participants are saying. It could be, let's say the price of gold went up to let's say 1900. And there was, for whatever reason, there's a major institution out there who really, really thought that gold was majorly overvalued at 1900. And let's say they have billions and billions of dollars in capital. And every time it gets near 1900, they're shorting the gold futures market. They have no legal requirement to disclose that at all. They don't have to tell anybody about it. They don't have to advertise what they're doing, but they can be controlling millions or even billions in capital and intentionally putting a cap on the price because they're trying to accumulate short positions in gold. But we're not going to know that. What we will know is we'll see, if there's a bull flag pattern forming, let's just say, and it goes up and it stops at 1900, then you're going to keep seeing that because what's going to happen is the price of gold is going to keep bouncing above that. And let's say there's another institution and they see, oh man, at 1860 or 1850, we think the price of gold is way too cheap. We're going to put $200 million in the line, and every time we have the price of gold get near 1850 or 1860, we're going to execute buy orders. And so you're going to see these two institutions, maybe they're not even talking to each other. Maybe they don't even know what the other one is doing. But you can see that price action happening. Or it can also occur that it doesn't even have to be big, large institutions. It can be aggregate market participants. Maybe there's, 500,000 people who believe in the United States, who each are willing to spend, $10,000 on this position, whatever it might be, who think that 1850 should be the floor for gold. Or again, that 1900 should be the ceiling for gold. Again, you're going to see these market participants. And then, of course, once that actually becomes clear, then people will start, probably traders especially, will start trading on that trend, right? And they'll recognize it as a bull flag and we'll go from there. But just the appearance of these kinds of patterns tells you something interesting. It can show insights to the underlying causes and reasons that people are doing something, even if you don't exactly know what those reasons are. So you can identify the patterns, and that's done in the practice of pathology. You can identify the patterns and then draw conclusions from that.
Yeah, even if you don't understand the reasons behind it, you can still participate and maybe use some level of information there to help your investing.
Yeah, and to me, I think that's one of the greatest insights that I've personally experienced about technical analysis. Yeah.
Oh, I don't know. I just wonder if price movement always has a clear reason, though, Like, I don't know. I'm becoming more and more convinced over time. I just mentioned this to you the other day that the markets are not actually, I think they're more reactionary than they are proactive, informed, thoughtful,
right?
Or like appropriately assigning value to different assets.
You're concerned that markets aren't forward thinking, and
forward thinking. That's a good word.
I think you further want to keep insulting the traders out there.
No. That's not meant to be an insult. That's just an observation that I've come to the an observation that I've recently had. I think some of it is just emotional and reactionary.
Sure.
And so I don't know, but I guess it doesn't matter if there really, it doesn't matter what the reason is. There is a reason. Ultimately, if it's just reactionary and emotional, then as looking at the patterns, maybe you're saying you can still capitalize on that, no pun intended.
Right.
It doesn't matter what the reason is. You can just know that is that it's happening, and you can see it, observe it, and use it to your advantage.
Right, but I do recognize that there are market participants who are reactionary. There are ones that are kind of more patient, or they're more predictive, or more longer term thinking. There are all kinds of market participants. Yeah. And it used to be that I'd sort of discount the idea of market participants who are more short term focused as having a legitimate effect on markets. But the fact of the matter is they do have an effect on markets, and a lot of them are holding on, at least in aggregate, and probably in some cases individually on the institutional level, hedge funds, et cetera, they're holding on to a lot of capital.
Yeah.
So what they do is going to matter, right?
And I guess seeing the patterns in their behavior is helpful, because an individual investor, if they recognize those patterns, they can use it to their advantage. That's what you're saying.
Yeah, exactly.
Even if we don't like it, it's worth giving merit to.
Yeah, and that's really my conclusion. I believe that technical analysis, along with sort of Benjamin Graham style securities analysis, along with macroeconomic analysis, which I think the precious metal crowd spends a lot of time thinking about, along with speculative thinking, which maybe some people in the precious metal crowd think about, and just various other constructs and ways of thinking, those are all tools that are at our disposal to try to understand everything that's going on and take actionable or make decisions and take action in a world of imperfect information, of potential fraud, of potential unexpected events, black swans, predictable events, all these things. We're all trying to figure out what to do to best preserve and in some cases enhance our capital over time. Those of us who are investing and trading and stacking too.
Yeah.
So this is just another tool, in my opinion.
Okay. Well, I guess you've sort of spun it in a positive light for me, because I'll be honest, and when we started talking about this, I was like, technical analysis,
Schmechnical
analysis. Just kidding. I mean, I do know there's some merit to it, but I think you make a case for it. You make a good case for it.
Oh, thank you. I appreciate it. Well, what do you guys think about technical analysis? Has anything in this video changed your mind? Do you, positively or negatively, do you use technical analysis in your own stacking, investing, or trading? I'm really curious to know. I'd like to have a discussion about it. Yeah, let us know. So this is Michael.
And Alexis.
With Bullish Investing. Until next time.
See ya.